What's up, everybody? This is Jack from Crypto 49er, bringing you my knowledge in cryptocurrency. So today I want to talk about time frames because that's one of the many lessons from the 24 cryptocurrency tutorials from Philicon. I think this is lesson number 11. So you might be wondering, why did I skip lesson 10? What is laddering? What is dollar cost averaging? I didn't skip it. It's actually part of this video, but I'll explain why towards the end, because I'm going to have laddering and dollar cost averaging towards the end. But before I talk about time frames, just want to give you guys the trivia question that you guys are waiting for. Again, I give away $5 in Litecoin or $10 on Cryptobridge every Friday, but you guys have to answer this trivia question. And the trivia question is this: what is a cryptocurrency podcast that I recommended, and the specific episode talk about a crypto trading bot? So not the video I made talk about crypto trading bot per se, but just the fact that that particular podcast and that particular episode from that podcast talked about a crypto trading bot. So let's see if you guys can find that particular podcast. I'm making these questions a lot harder than previously. You can't Google search for it. You have to have watched my previous video for a chance to actually know these answers. The good news is, if you guys can answer it, at least the giveaway, let's move to next week's giveaway. So it's not like I'm just keeping it. I'm just going to still be giving it to you guys. Just that you guys will have a bigger giveaway to work with if no one can answer this week's question. So remember, you have to answer this question on my Twitter post of Wednesday's video. Good luck, everybody. All right, time frames. So time frames are a relatively simple idea. It's just that when I was reading it, and I just couldn't put two and two together to understand what is it talking about in terms of low time frame versus high time frames. As I listed here, the low time frames are 1 minute, 5 minutes, 15 minutes, and up to an hour is the low time frames. And the higher time frames are 4 hour, the 12 hour, the daily, and even the weekly, which you sometimes see people use. I mean, even Philicon sometimes uses the weekly time frames. The swing traders only care about the higher time frames. They wouldn't be looking at the 1, 5, and 15, but the day traders would definitely be looking at the 1, 5, and 15, and day traders, at least Philicon, since he's a day trader himself, he doesn't hold any overnight positions. But he does put in limit buys and hope they triggers. If he's expecting a coin to drop down to the golden ratio, the 618, then he's gonna ladder and buys over there, so that hopefully he's gonna be able to get those coins at that price range. So think of the higher time frames as looking at a forest, and the lower time frames as looking at a specific tree. So if you want more detail on what is happening, you would want to move to a lower time frame. And there's this thing called the trigger charts. So what is a trigger chart? So a trigger chart is like this. So right now I have RSI listed for Litecoin, and you can see that it actually got overbought and it just dipped back below 70. So if you look at the higher time frames, let's say you look at the daily instead of 3 hour, you'll see that Litecoin is nowhere near that position, for example. So, but you can see that there is a upward trend going on because of the upward trend movement for today's prices. So, but if you go down to the lower time frames, let's say you go to the hour, for example, you'll see that not only was Litecoin overbought, it was overbought significantly, well past the 80. It was at 86. So, and you see that actually it was hanging around in the overbought zone. It was actually very bullish for most part of the day, and then you can see that it just never went below 40 even. So below 40 is not bullish anymore. So below 40 is a bear. So right now you can see that for the hourly chart, it was bullish pretty much throughout the day, and even last night, and so on and so forth. So you can see that there's different time frames. You can get more detail, more specific about the trades that are happening during that particular time frame. Again, the trigger charts are like this. In the daily chart, you see RSI as oversold. It is possible for lower time frames will become oversold as well. And in the 5-minute chart, you see a major uptrend in RSI. It is possible you see an uptrend in the higher time frame as well. So that's pretty much the idea with trigger charts. And the other thing to look for is Confluence. Philicon talked about Confluence a while back, and really it comes down to using a confluence of indicators between MAC histogram and RSI, but we can also look for confluence in time frames as well. So for example, if you are swing trading, just use a 55 EMA to 3 hour chart for buy sell signals. So again, the idea is to see confluence from different time frames. So let's say if you were at the 1 minute time frame, for example. So you see that right now it's turning bearish again. So it's dropped a lot. So if you go 3-minute, then you'll see that it's also in a bearish mode. So you can see for a day trader, if they just look at the 1, 3 to 5, they see that it's really going towards the bearish trend. In fact, it's actually already there at around 39. So you can see that the coin's starting to trade downhill again. But if you're a swing trader, and I just entered a swing trading position for Litecoin, if you look at the 3-hour chart, for example, and you look at the Fibonacci lines, you can see that they're all about to push through the 55-day trend line. So the 55 is acting as resistance right now. The 8 already pushed through. So right now you're seeing some resistance coming in because the 8, the 13, and 21 is trying to push through the 55. So if it doesn't push through, then my position is going to be a loss. But we'll see what happens. So I bought in a little earlier to say Silicon will probably have suggested to wait until the 8, 13, and 21 actually went through the 55 first. But if you look at the other indicators, for example, if you go in the lower time frame, you go into our time frame, for example, you'll see that it's actually fanning out pretty well. It really depends on the time frame that you're looking at. But again, you're looking for confluence in time frame. So if more than one of these time frames are telling you that it is a bullish trend right now, then you should just kind of follow it. And pretty much that's the other thing that Silicon talked about in this video. Is he said that if you're swing trading, just use the 55 EMA on the 3-hour chart for buy-sell signals. No stress like day trading, and you can actually go out and enjoy the sunshine, because he was lamenting the fact that him being a day trader, he doesn't go out a lot. And the final thing he wanted to point out for using time frames is that, so which time frame do you have to look at as a day trader? You need to look at all of them. So to make the proper decision, you do need to look at all the time frames. I would say that you probably want to go from the daily to the minute. So you get a zoomed out picture first, and then you zoom it back in, and you can see exactly what's going on specifically to that particular moment that you're executing the trade. So that's pretty much about time frames. So now there's this whole section about laddering from his lesson 10. The reason why I'm adding this to this video instead of making separate videos for both lesson 10 and lesson 11 is because for some odd reason, Silicon didn't really talk about laddering that much. So in this, and the video itself is very short, so you can probably just watch it yourself. It's like 13 minutes long, so there's really no reason why for me to make a whole separate video that will last about as long as his own video. But he did talk about, again, the RSI. The reminder, RSI bullish zone is 40 to 80 plus. If it goes under 40, sell. Additionally, look for bearish divergence, 2 or 3 lower highs in the RSI, then sell. This kind of reminders. And then the laddering idea is to take profits earlier than riding the entire wave. So you take profits instead of riding the entire wave. So it's absolutely so it's the inverse of his 55-day EMA trading strategy. But it looks like this. So for example, if you follow the Fibonacci trendline strategy that he has, then you're just going to gain 322% in this particular example with Litecoin. But that's example 1. So case number 1, ride a wave, big risk. But the other option is to just ride it up to the top right here and then sell it. So what you do is you take a 94% profit, and then you will have 94% here, and then you'll buy back in when it dipped, and then you will buy back in and gain 175% gains, and essentially you end up taking profit and having less exposure, less risk, and more reward, because you can see that the 2 profits together is actually longer than the case 1. So that is the idea with laddering, at least from his point of view. But the traditional meaning of laddering is actually to split the entry point of a buy into multiple prices, as many as 10 different points, so you don't feel the pain if there's a downturn that didn't match your technical analysis. That's my understanding of laddering, so I'm not sure why Silicon didn't really cover that in this video in here. And he also mentioned what is dollar cost averaging. Again, unless I fell asleep in his 13-minute video, which I didn't do, I'm pretty sure, he didn't talk about dollar cost averaging at all. But the idea of dollar cost averaging is very simple, right? It's just buy a set amount at a specific time frame. And I've done that with Bitcoin pretty much since February. So I have dollar cost average into Bitcoin because I personally am relatively bearish on Bitcoin. I don't know if this latest trend upward, if it's a bull trap or if it's actually a turnover from bear to bull. But either way, I'm dollar cost averaging into it following the Mayer multiple. And I'm actually getting pretty good value right now in the last few days because a lot of these really small buys were less than 1 Mayer multiple. But if Bitcoin drops it to 3,000, then it doesn't seem so good. But again, it doesn't hurt me that much because these amounts are so small that I don't really care that I don't really care if the price of Bitcoin goes up and down. All I'm doing is just accumulating Bitcoin at what I consider as a value price at a very small amount. So that's pretty much the idea of dollar cost averaging. So that's my video for today, guys. Let me know what you guys think. Leave a comment down below on what you think about the time frames, because I found it very useful, even though it's not that difficult to understand as Fibonacci extensions, and it's something that you just have to watch the video once and you should probably understand it relatively easily. So anyway, I hope you guys enjoyed this video. As always, smash the like button for me, smash the subscribe button for me. If it isn't crypto, it isn't worth mining. It isn't worth speculating. I'll see you guys tomorrow. Peace out.